Well, a very good afternoon, good morning. Welcome to FX Week Ahead live market analysis with myself, Giles Coughlin, Chief Currency Analyst. Very good welcome to you, Nahar. Good to have you here. Yasser, good to have you. Arif, a very warm welcome. Masai and Maurice, good to have you here. Just as folks are coming into the webinar, don't forget as we go through this, the whole idea of this webinar is an educational webinar. So you see how someone with a professional trading background goes about approaching the markets. So don't forget, it's not a signal trading service. With that said, I'm going to be looking at a number of key data points today. Very busy week. We're going to be starting by giving an overview of what's driving markets at the moment. So we're 100% locked into the major narrative. And then we're going to see why US growth data is so important, particularly the 3 p.m. ISM data coming up today. I'll show you the intraday trade options that there are for that and what data print we'd need to see for an opportunity. We're also going to look at what's going on in equity markets and explaining how the major narrative of the last FOMC print has impacted the market narrative, and we'll be looking at that. So without further ado, don't forget the workshop topic we'll be looking at today is getting ready for the Bank of England rate meeting. That'll be on Wednesday, 12:30. I will also get us ready for the ISM services print, which is coming out, which will be very important. So there's really three big events for us to get ready for on Wednesday: the ISM services print, the Bank of England meeting on Thursday, and then non-farm payroll. So it's US growth and a central bank meeting, and we'll briefly cover the Reserve Bank of Australia meeting that we have coming up overnight tonight, and I'll show you which is the go-to currency pair for that and what to look for. Okay, folks, so without further ado, we'll move over to the other screens. I'm just moving my desk down, and we will go over. I hope you can see my screen and hear my voice okay. That should all be coming through okay. If you've got any problems, please just let me know. Okay, that's all right. So now we'll go over to the calendar. Okie dokie. So I want to start by giving us the major rundown on narratives. Now, if you look at US equity futures markets, what you see is that they're all broadly higher last week. Now, the gains we've seen in equity markets, and if you look at the S&P 500, I was speaking to Reuters today, and I was just saying this is the best week for the S&P 500, the best monthly performance since November 2020. So you're going to go all the way back to November 2020, right, to see a better performance than we had last week. So that tells you that there's been a lot of equity buying. Now, if you just look at the trend, you can see the trend has been moving down from the start of the year as equity markets have been expecting and pricing in more aggressive Fed interest rate action. So the reason the S&P 500 has pushed up higher is mainly because at the last Federal Reserve meeting, the Federal Reserve recognized that they will now be looking at slowing growth. Now, I was speaking to benzinger.com. Don't forget, you can follow me on Twitter. I flag up sort of quite a few of the media interviews I do. And the night before the Federal Reserve meeting, I was saying, and as I've been sharing with us here, if there's any signs of slowing growth and the Fed recognize that slowing growth, then investors are going to think the Fed's going to be less aggressive. Because remember, the Fed has only one tool to tackle interest rates, and that's by tackle inflation, and that's by hiking interest rates. So what the Federal Reserve have been doing is aggressively hiking interest rates. That's why equity markets have been pushing lower. Why? Because higher interest rates mean higher debt repayment. It means less disposable income. So it means investors are expecting companies' profits to be less. So that's why equity markets have been selling, selling, selling. Now, investors are starting to think, well, hang on, if the Fed are going to be less aggressive in hiking interest rates, will we see some equity markets gain? Is this the bottom in? Now, it's far too early to say that this is the bottom in, And most analysts will point out that generally speaking, bear markets tend to be a bit of a deeper correction than what we've seen. And I think that view is legitimate when you look, look how much the S&P 500 has been gaining, look at the speed of the ascent. And that has been low interest rates, fiscal stimulus, and you just see how the speed is so much higher than it normally is, right? You see normally when equity markets gain, they don't gain at such a steep ascent, but the gains 2012, 2016, you're only looking from like 1200 up to what, 17, 1800. So, it took quite a few years, right? But if you look at the recent gains from COVID, very steep. So there could easily be another leg lower here in the big picture. But for now, equity markets are moving because growth is showing signs of slowing. The Federal Reserve are recognizing it, and that's what pushed equity markets higher, right? That's why the Dow's up, Nasdaq up. On top of that, we've had good earnings. Apple, Amazon, Google, Visa, all big names looking positively towards the third quarter. All big names looking like consumer spending isn't necessarily slowing massively. So taking that as a whole, equity markets have had reasons for gains. That's the big narrative. Now, on top of that, we've been seeing the US dollar also sell off, and that's the other major currency we need to take a look at. Now, the dollar, again, let's zoom out, get that big narrative, was just gaining since the start of the year. Why? Because the Fed's expected to hike interest rates aggressively. And then we started to see safe haven bids coming into the dollar. So the dollar was just gaining. We've now broken lower, and we've broken through that potential trend line. That's why we're seeing the dollar yen push lower. Dollar yen also has a seasonal period of weakness now. Tend to see yen's gains around the summer months. It's a seasonal pattern that you can notice across all the yen pairs. In fact, let me just show you that very quickly so you can see that. You just look at the yen pairs, you'll see the yen tends to strengthen, which is dollar yen weakness around this time. So 15 years, and go 1st of August, end of July, you can see it tends to lose value. And it's not just the dollar yen, it's across all the yen pairs. Generally, when you see weaker stocks in the summer, you tend to see this strength gain on the pound yen. Okay, so that's what's going on there. And the flush lower in the dollar yen. Now, euro US dollar has been pressured to the upside, but still hasn't massively gained because of the negative data points coming out of the euro. So it's been quite range bound. But like pound US dollar gaining, New Zealand Aussie US dollar gaining on that weak dollar. Now that's the major narrative. So you've now zoned into the major narratives. So a couple of the beneficiaries was gold and silver, really gained strongly, and they gained on this dynamic going on here, which is when you have real yields in the dollar moving lower. As I said a number of times, that really lifts gold. So the sinking of the 10-year yield, sinking of real yields, sinking of the dollar really lifted gold. I've been long gold and silver. I've been long silver since after the FOMC event. You can see that bonds are pushing lower as well. The bond yield rather. See the gold-silver ratio is pushing up towards 100. That just means silver is cheaper in relation to gold. You can see silver prices gaining. Now, this is one tradable opportunity that I'm going to be looking for later on, and I want to run through that with you now. If we have later on in 1 hour and 20 minutes time, if the ISM data point, if it comes in below 50.5, what that means is that that's another indication that US growth is slowing. So it means the Fed can be less aggressive. So that means that dollar weakness we've seen can continue. So we'd expect upside in silver, upside in gold. So a very simple trade that could be taken is buying silver at market and taking profit just ahead of that R2 resistance level. The other opportunity would be looking at the S&P 500 and Nasdaq. looking at taking profit at a key pivot point. So for instance, in the Nasdaq, if we just put a pivot point in, say looking at taking profit just ahead of 1300 at 13050 region. All right. Similarly with the Nasdaq, with the S&P 500, really, it would be similarly looking at taking profit up at 4150. Okay. So all we're looking for here is a miss in the ISM data, and that's it. Get a miss, and that will be buying silver at market, take profit at the R2 pivot point, and same with the S&P 500 Nasdaq. You can also look at gold, that would be the other option. So if we just take a look at gold, let's just whack on a pivot point, and then very simply, you know, at market, taking profit at that first pivot point, and if you get beyond that, just moving to the second pivot point, and that would take us up to probably just under 1800. Let's have a look. Yeah, just a little bit high, just underneath 1780. Okay, so that's what we need to look for coming up later. Right, you now are in tune with the big narratives. I'm now going to run through the calendar for the week. I'm going to check if anyone's got any questions. With the workshop, just make sure that you register here, CN. So it is the workshop here. Just click on there, register now. I'll put this in the chat box if I can. Yes, I can. And just register there under the and there should be, just tick that box and you should get emails. If you don't get emails, contact support on that page. I don't deal with the support side of things, CN. I just focus on the analysis. But one of the team will help out. Like if you get any problems or you need an extra, you know, shift at help, just, you know, message me here and I'll try to get things moving for us. Okay. Right. Okay. That's great. Right. Okay. So we're now going to go into the calendar for the week, and I'm going to make comments as we go through. So a couple of things to note. First of all, Chinese data very weak. Okay, manufacturing PMI below market's minimum expectation, and HYCM manufacturing PMI, that's the private manufacturing data, below market. So that's very low, and a big surprise to the downside. Now, normally that would have potentially have sent equity markets lower. It hasn't, because the markets are so positive after the Fed meeting and after earnings. So positive sentiment is able to kind of overshadow this negative sentiment from China. But don't forget, this has the potential to weigh on sentiment. We've got property issues in China. Nancy Pelosi is still set to visit Taiwan. There's tensions between US, China, and Taiwan, obviously with China wanting Taiwan to be back as part of the mainland, and Taiwan wanting independence, and the US acting as a kind of broker between the two countries. So that has the capacity to turn risk off, so be very careful of that. So weak data out of China, weak data out of Germany, which weighs on the euro. Don't forget the euro yen, we have a sell bias on that. So on medium term, any retracement higher in the euro yen is suitable for selling. Now, let's just have a look at this. If you just look at this on the weekly chart, I was looking at selling, you know, I sold some of this last week. You can see this false break of Arami inside bar, short sharp lower. Any tracements up to 1350, any retracements up to 137, both are suitable for shorting. Ultimate target is 134 region, okay? And that's on slowing Eurozone growth. This morning we saw more bad news for Germany, retail sales down lower. Saw a little bit of upside in the Eurozone PMI data points. 49.8 above the high market expectations, but still only just above the forecast. But the outlook is still pretty bleak for the Eurozone. Russian energy crisis, high energy bills, slower PMI data having come out of Europe in the last couple of weeks. The ECB hiking by 50 basis points at their last rate meeting, but only doing so because they're saying we're doing it early and growth is being revised lower for the Eurozone. This is the best tradable opportunity in 1 hour and 15 minutes. If it's below 50.5, then I'd look at going long pound US dollar, long silver, long gold, long S&P 500, and long and Nasdaq. All of that would make sense. If it comes in above markets at forecast 53, then I'd look at buying dollar yen, and I'd also look at selling euro US dollar. Again, going to the next pivot points. Okay, so it's just intraday trading that, short, sharp, but that's markets laser focused on growth. RBA meeting expected to hike by 50 basis points. You can see here, courtesy of Financial Source, I work as one of their analysts, that there's a 100% chance of a 25 basis point rate hike, and there's a 91% chance of a 50 basis points rate hike. So a 50 basis points rate hike is pretty much priced in. If they hike by 25 basis points, then you would expect some downside in the Aussie. If they start slowing growth, that will be the best opportunity. And I'd look at shorting like the Aussie New Zealand dollar pair. When you're trading the difference in RBA and RBNZ interest rates, you want to look at the Aussie New Zealand dollar pair. That's your go-to pair, okay? So we'll just quickly look at it technical. I'll show you any technicals that I can see here. Let's just look at it technically. Okay, price pushing higher into that overall resistance area. You can see here you've got really you got tailing. It's rejecting that level. Nothing convincing technically though, but just recognizing that some rejections. We've also got this larger band of resistance that we're testing, and that 200 exponential moving average. So we're in major resistance now. On the weekly chart, we can see that we are similar story. Daily chart, let's have a look. Yeah, okay, so what we're looking at here, the best way of trading this would be just having that line there. If the RBA comes out more dovish, they're sort of pausing, concerned about household spending, expecting to be less aggressive, then look for a break of that trend line. Okay, that would be the way to trade that. No trade at the moment, right? There just isn't a trade at the moment. It will be only if we have a more bearish RBA. And the thing we'd look for is basically to see them stressing growth concerns, similar to the way that the Fed did. So that's what I'm looking for. Not expecting massive opportunities there, but just run through it anyway. New Zealand data, that will be important if we're trading the Aussie New Zealand dollar on Tuesday evening. And if that comes in strong, then we could see even more Aussie New Zealand dollar downside. So look at that. We have business confidence data out of New Zealand, which was more positive last week. And that's allowed the Aussie New Zealand dollar to fall a bit lower. If this comes in strong again, and labour data is still very tight, that will be good news. So the best opportunity will be a dovish RBA, hawkish RBNZ, and then looking at shorting Aussie New Zealand dollar. Wednesday, more Chinese data. Comes in lower, it's a disappointment. Don't forget, that has the ability to change sentiment. At the moment, sentiment is still broadly positive, although it's mixed, on that Fed growth data focus and expectations of a less hawkish Fed. The Eurozone data coming out, composite PMI, that will be important. Now, don't forget, French, German, Eurozone. So when this data comes out, the Euro starts moving from like French data, then German data, then Eurozone. By the time the Eurozone data is released, the market's usually made its move because Germany is the largest constituent in Europe. And by the time you've got German data, you know the Eurozone data, because often Germany influences the Eurozone data so much. So if there's a miss for France and a miss for Germany, then we have a miss for the Eurozone. So what you could look at here is potentially, if the Euro-Yen trades a bit higher, and it's trading a bit higher on Wednesday, and then you get a bit of a miss here, you could look at moving intraday, a couple of points down, a few points down on the Euro-Yen. So that's what I'd look for there. But don't forget, be around for the French data first. Don't come into the Eurozone data, because by that time, most of the move's gone. Then we have ADP data. Now that doesn't predict the NFP, but it does set the mood for the NFP. And if that's negative, then that will be dollar negative. But the best opportunity again is going to come from the services PMI. Remember, US, about 70% of the US economy is service driven. So what happens to the service sector in the US is incredibly important. And if we see the PMIs disappointing, then that's more negative growth. And again, you'd expect even more upside gold, more upside silver, more upside S&P 500, Nasdaq, and pound US dollar upside. And if it's strong growth, 55.9 positive, like dollar yen upside. Thursday, BOE day. We will cover that in more detail when you come back on Wednesday. But that is, a lot of negativity has been priced into the pound. Let me show you. The Bank of England has been quite negative for the pound for some time. Let me just, if you just take the pound, if we just zoom out a little bit, you'll see that, since April really, the pound's just been selling off. Bank of England revised growth down negative to 2023, and the pound is basically vulnerable to a retracement because a lot of the bad news is priced in. So any signs of good news from the Bank of England could really lift the pound on Thursday. We'll look at it in more detail then, and I'll show you which currency pairs to potentially look at. And then we have jobless claims. Now, initial jobless claims, they've been coming in weak recently. So initial jobless claims, 255 expected, up to 256. If that comes in high, 280K, and continuing jobless claims comes in above 1460, again, that's slowing growth. So on Thursday, anything above 280, anything above 1460 will be, again, dollar negative. So that'll be upside gold, upside silver, upside S&P 500, Nasdaq, upside pound US dollar. Now, of course, you have to be aware what else is going on in the market. So if all of a sudden the markets are absolutely tanking because of bad Chinese data, then you wouldn't necessarily want to go long the S&P 500 and Nasdaq. So you have to use your common sense. But that's, as things stand at the moment, that's where we're at. Friday will be important for that couple of things. The RBA statement, always, that statement has the potential to undo or enhance what was decided on Tuesday. So this is one of those situations. Normally, it does nothing, the statement, because everyone already knows the data. But sometimes it can impact the currency. So just acknowledge that. Think about that if you're exposed to risk, if you've initiated any positions in the Aussie New Zealand dollar pair. You have to recognize that as a risk event. Japanese data coming out, just want to check on that. Not expecting it, but obviously with the Japanese yen being so weak for so long, we are now seeing some yen strength. So just look out for Japanese data. I wouldn't be surprised if the market sort of all of a sudden started focusing in on it. If there's a big miss there in Japanese data, then that could allow some of that recent yen strength to retrace. The Canadian and US data. So Canadian data has been very strong recently. Remember, the Bank of Canada hiked by 100 basis points their last meeting. If this is good, strong data again, then CAD still expecting range bound because the CAD's been heavily bought on good data. So the best opportunity will come from a miss. So if this is the big miss, then CAD weakness makes sense against the yen. So again, you'd be looking for, what you'd be looking for, something like unemployment rate. So unemployment rate up above 5.1%, employment change down below 46,000. So that's above 5.1, that below 46, then you'd look at going short CAD yen. Best opportunity would come from the NFP. Now, jobs is a late cycle indicator. In other words, when you start seeing jobs slowing down, it's usually one of the last things to show signs of a recession. because you think about it, companies are slow to hire, they're slow to fire. Of course, you don't want to fire people, right? So you hold on to the last minute before you start firing your employees, for sure. And you only do it when you have to. So by the time a recession, is kind of upon you, that's sometimes when you start getting like labor data going lower, because like the problem is so clear, you just can't avoid it any longer. But that means that sometimes the economy can essentially be in a recession. And remember, technically the US is in a recession with 2 negative GDP quarters, but it's not like in a recession proper, because the labor market's still strong. And if you look at unemployment rate, look, 3.6%, so fantastic. Most people are still in jobs, which is great. But if this disappoints us to the downside, then that's more slowing growth worries, upside gold, upside silver, upside S&P 500, upside Nasdaq, upside, I want to say pound US dollar, but it could be Aussie US dollar, depending on what the RBA decide. And we have to see what the Bank of England said. But a dollar weakness is what you'd expect. Umar, is this webinar recording available? You betcha it is. There's some diamonds that I'm sharing on this and keeping us all on top of the major narratives. So don't forget, share it, like it, get the word out. The more people that use this webinar, the better, right? Good to have you. Folks, that is it. Don't forget, come back on Wednesday. We'll get ready for the BOE, okay? We'll get ready, we'll find a currency pair, and we'll really nail down into it so that we're prepared. Thank you all very much for your time. Good to have some good faces here again. CN, great to have you around. Nahar, great to have you. Salvatore, been a long time listener. Sylvanus, Yasser, very good to have you all away. Oh, I did not know that we could rewatch this webinar. Weird, please. Massey, check with support, right? Check with support, just go to the page, but I'm pretty sure we have it on YouTube. So if you go to YouTube, look at HYCM on YouTube, and you'll find all my recordings there. They're usually there like maybe like 1 hour or 2 hours after the webinar. And I also do like a daily webinar service on my to my clients, where I go through major events every single day, but that is a paid for service. But this one is free with HYCM, and the Wednesday one's free. So take full advantage of that. Don't forget, you can look me up on Twitter, and my Twitter handle is @GilesCochraneCCA. Thank you all very much. Oh, the sign up screen freezes. Support cannot help. Okay. Not sure where that is. Just try sending an email to support. So send an email. Under the contact us. There must be a way to contact them. So either live chat, use the contact us. Use one of these ones here, Cian. Yeah, yes, so my tweet is @GilesCochraneCCA. I'll just put it in there. There it is. And I've got my latest tweet. It's just what, that silver outlook. See, and I hope that helps. Thank you all very much. Take care, and look forward to seeing you back on Wednesday. Thanks, everyone. Goodbye.